My name is David Siddons and I'm president of the David Siddons Group.
My name is Mick Duchon. I work with Eli Carbonate at Carbonate Duchon.
My name is Bill Hernandez. I'm with the Bill and Brian team and I work with Brian Ciarni.
And we are some of Douglas Elliman's top producers, and we're going to discuss, as friends, the last 6 months of COVID. Guys, thanks for doing this video with me. It's kind of funny because we were sitting talking here before we were shooting, and we were reminiscing on that trip that we had to Connecticut for the Elliman Awards back in February, I think it was. And I don't think any of us imagined what was going to happen. And so now going forward, you know, we want to discuss what we've been seeing in our markets, what we've been trading, what's happening, and the reflection of what kind of buyers we're dealing with, and what's going to happen as we move through to the end of the year and into 2021. So, Mick, I'm going to start with you. Tell us what you guys have been doing, obviously what neighborhoods you trade and what big deals you've done and the kind of buyers you've been handling.
Our business is concentrated in Miami Beach and then some of the sections around Miami Beach, like Bay Point, occasionally Coconut Grove, and sometimes Coral Gables. So we're seeing a major influx of people from the places that we were seeing clients from, like New York, Chicago, California, and occasionally a few places outside the country, although primarily the tri-state area and high tax states that really visit Miami Beach to get away from the cold weather and also for the tax incentives. Recently, there's been more velocity in certain spaces of the market. For example, the waterfront single-family home space on Miami Beach has taken off. It's nearly impossible to keep a listing as long as it's priced according to the market. Yeah. And recently, we've seen a push, an increase in pricing because of the amount of absorption that's happened for the tier 1 product. It's forcing buyers to go to areas that they wouldn't have necessarily considered previously. And in turn, the prices of that product is increasing.
And give us some example of that product that we're talking about, because kind of we deal with it, but for the audience who may be, and I imagine that people who are going to watch this are probably thinking to themselves, who actually knows what's going on and what product is moving and what product should I be looking at and what should I be aware? Because if they come into the market and they think everything's going to be easy to get hold of, they're going to kind of be a little bit mistaken. And you know, like we've said before in videos, it's kind of like a bubble. You know, we don't feel the tensions going on. We're kind of unaware. We're aware that we're in COVID scenario, but it's not hurting us as much. It's not impacting us as much as other cities. Bill, I want to move on to you for a second, sure. Then we're going to bounce back and forth. Tell us about the markets that you work. I mean, we work deals together, so we kind of tell us about the deals that you've done, the markets that you're in, and what you've seen, and get a bit if it reflects with what Mick's saying.
Yeah, and I also want to kind of allude to kind of question I asked Mick, and so I ran some reports, and in 2020 there was 19 single-family homes in that 15 to 30 million mark that were sold in contract. Then fast forward from that report, and 2 weeks later, 4 more homes sold on Star Island, as high as 48 million, and some were off market, right? So when you take that, this is how I and me and Brian, we kind of perceive this. COVID makes people rethink their life, right?
Yeah,
so the rethinking happens is this: they start being sensitive to space. So who are these buyers? They are from the tri-state area, and they need a big home because they need the gym, they need the swimming pool, and they can't have these services in condos. So a big thing is this rethinking, and it has caused the single family home market to kind of surplus, and then big units. I'll give you an example. We made an offer on a unit at Four Seasons Surf Club. Why do they want to buy Four Seasons Surf Club? Number one, hotel #1 brand down here. They wanted services. COVID took away services, took away Lercera News, took away Thomas Keller, right? So now they're like, okay, we'll spend that money on a single family home. That thinking had never happened pre-COVID. the market and the single family market has taken full advantage of the situation, and now they're saying, you know what, I could live in an 9,000 square foot home. I could have my staff, I could have a chef, I have all my amenities within, I could work from my office, my hedge fund or my private equity allows me to, and you know what, I can now think about relocating my business down here, get the tax advantage, and as Mick said, think about myself living here, right? We didn't have that before.
I guess the question now is, where are we going? Because I think most people want to know, what does the future hold? What are the areas where we're going to maybe start to feel we're going to be dry of product, and that buyers need to really respect the fact that it's going to be maybe slim pickings and maybe get slimmer and slimmer. And where is the focus? And I want to hear from both of you where you think the focus are and where you think we're going.
Buyers, if they're interested in moving here now, will be forced to pay a premium. So, and there is some new product coming online, and after having conversations with the sellers, because we all get interviewed by a lot of the same people, they're going to demand a premium because they know that they're holding on to something that is very valuable right now. I'm noticing buyers that were more frugal in the past and were really difficult to negotiate with. They're finally coming to the realization that, at the end of the day, it's
there's an awakening. I'm not the biggest player in the room anymore. Like you just said before, there's like a ton of very, very ultra wealthy buyers who are now running around our market because they see more reason to live here in Miami and South Florida than they do in Manhattan or Chicago or San Francisco. And we're not that much of a big market. So now it's like the competition's really there, and if you really do want something, there's not that much amazing product out there. It's not as like there's thousands and thousands of options, especially in the housing market and the land market.
Correct. So we're seeing people come to the table quicker for more money, which is great.
I would add, because it's funny that Mick said that. So I'll give an example of when he says people have to pay a premium. Remember, South Florida is still, when we can say our premium, we're still per square foot lower than San Francisco, lower than Boston, certainly lower than New York City, lower than the Hamptons. So we're still a bargain. When we talk about the height of our market for single family homes, 2,000 a foot. The height of our market for oceanfront condos, 3,000 a foot. That's still in fair comparison.
Even compared to Palm Beach. You were just telling me Palm Beach like 5 minutes ago.
Yeah.
Off camera. Like there's a deal that just went up there. I mean, we're talking over $100 million.
Chris Homes right now is selling Lower North Bay Road off market, 25 million. They don't even hit the market.
And are these mortgage deals? Because this is a question that just came into my head literally the second. And I'm when it comes to like the lending process right now, because the banks are offering really, really low rates, are you seeing a lot of your buyers are still going out there with interest rates being so low? Are they out there buying cash, or are they obviously heavily financing because of rates? I mean, are you running into any problems with that?
So the deals that we've facilitated, and this isn't recent, it's just over the past 10 years or so, they're all cash deals. Well, they're all cash contracts. But it's really common for our clients to go out and get financing.
The contracts that we see are always cash, no finance contingency, but when it closes, hey Bill, an appraiser's coming in, can you help me out? Why? Because if they don't have to outlay the cash and they can borrow at 2% or 1.75% private banking, why wouldn't they? And they use their cash for business. We did a deal at the onset of the pandemic.
We did.
And you called me and you said, hey Bill, I need to send an appraiser. And I'm like, well, it's a cash deal, David. And you go, no, it's private banking, don't worry. And I remember, I don't even think the appraiser came. They did a spot appraiser over the phone or
it was
FaceTime.
That was a crazy deal. That was a deal we did holding our bags at the turnstile at the airport.
That was very unique. That's a true pandemic deal and that's another thing we haven't talked about here. We did a $80,000 a month rental on FaceTime. So let's talk about how the pandemic has changed our jobs.
Yeah, that's crazy.
Transactions are now happening where they just trust us as advisors. Mick alluded earlier saying, these are some of my same clients that I've worked with that are now swapping. So now they're really digging into their relationship with us, and they make decisions now very rapidly, and they don't necessarily have to see the property. If they know the area.
Are you finding that as well, Mick? Are you doing FaceTime?
We
FaceTime
are.
deals?
we're doing more FaceTime. We're doing more deals from FaceTime in the rental space than the sales space. Although
Correct.
that said, there's not many. There's been a couple of transactions that we've facilitated on FaceTime in the sales space, and it's really we're seeing something else that's interesting. Like we were discussing before the cameras were rolling on your listing for 401 West Remo. The client that I made an offer with for a lease ended up going out and buying something at a higher price than I anticipated because
the rental numbers are so crazy. And that's you're talking about product which normally you get in a good day $6,000 for every $1 million of investment, and if you've got a product that market value is $4.5 million and you're getting $35,000 a month.
Correct.
Then what a great return, but it's very hard to justify for a renter who is actually in the market to buy to say, I'm going to pay. And again, these numbers, once you get above a certain level, you're like, that's pretty hard to swallow that amount of money for rent. And I know they're coming into a new city, but I think it then pertains to the confidence of where the market is and where it's going, and that comes down then to next, I guess, leading on to segueing into the next final point. Is this sustainable? Is this something that we're going to see?
And I have a theory on this. So a lot of people, and I've talked to a lot of other talk brokers or colleagues, so the season that we're having right now, this summer explosion of single family homes, and the confidence will come back, people then will start coming back down here. But there's this also overall kind of thinking that our busiest now, this is our winter season.
Yeah, this is when this is when our engines start to really get
So let's fast forward where our launch, especially for us Miami Beach brokers, was Art Basel, right? December 1st through, and then when 7th ended, I remember, last Basel, I sold an apartment at Continuum for 11.2 million. It was on the market for 8 days, right? Hedge fund guy comes in, they see it, they're at Continuum with their friends, they just buy it, right? So now there is no Art Basel, we canceled, which is kind of crazy.
No more bananas for sale.
Yeah, none of that stuff. But now, you said sustainable. Will we now have that, or are all the New Yorkers already here? Are all the Chicago's already here this summer?
That's a good
because the smart ones are saying, I'm not going to wait until it's cold. I'm going to come now. So think about who we're selling to: highly educated, very strategic, very smart buyers. People that have 5 million, 8 million.
Already successful and very affluent, and obviously being currently very highly taxed.
But I do know that our market has reshaped itself. So what used to be expensive, $2,000 a foot for single family homes, is not expensive anymore. That's just a norm. If you have a great home and it could be a canal view, not open bay, but it's good construction, it's gonna sell. We just launched a house. It's the largest house in the Venetian Islands, 16,000 square feet for 34 million. And we've had 9
beautiful house.
9 qualified buyers that come through.
Let's talk a little bit, as our skyline, we survey our skyline behind us, and condos are everywhere. Let's talk about the condo market for a little bit. And it's a bit of it's a taboo subject, but it's something that I don't think we like to make our conversations all kumbaya, everything is like. I think there's some clarity that needs to be given on the condo market, and we've said before, we've seen some pretty hefty discounts wrapping through our luxury condo market, and we do have a lot of product. Now, it's not all great, for sure, but there's definitely been some awakenings for the sellers to reduce their prices and come down and get deals. Mick, you do there's a lot of stuff that I've seen that you've handled in that South Beach market. Tell us a little bit about what you're seeing on the seller's side psychologically, because we talked a lot about the buyers, but not much about the sellers. What are you saying?
So the depreciation in the condo space isn't necessarily all because of COVID. Now, it's definitely depreciated just because there hasn't been that much velocity in the space over the past couple of years. And that's for a couple of different reasons. There's been a lot of really beautiful buildings that have been resurrected. So some of the inventory that were existing and that was on the market is competing with newer product and at very similar pricing. I tend to see the condo space as being more of a seasonal, at least on the beach side, a seasonal market. Like, it's very unusual for us to see this amount of transactions in any space in the market, and I think it's really had a positive impact on the single family space. But the condo space is always really slow over the summer, and although it hasn't had the same impact as COVID did on the single family space, I think that the rental market in the condo space is just as or more active than it's been previously.
Great point.
And
That's
as
interesting.
people are coming, we've done several various transactions.
But what are those? Like, give some specifics, because I think we're not talking about these small 1 and 2 bedroom units. We're talking about sizable products here.
High price product, $20,000, $30,000, $40,000, $50,000 a month, and everybody wants a bigger space. People are coming down, they want a minimum.
They don't need an office.
Who are those people? Who are those, like, those tenants? Like, where are they coming from?
So we're seeing people from the tri-state area, from Chicago, from California, and from places that, we've seen in the past, although they're coming down here and they're comfortable in the condo space and they just want bigger properties, bigger condos. Their families are growing and they're willing to spend more because they know that they're going to spend more time here.
The strength of South Florida, if you were, I don't know, your audience, if you're sitting in New York or Chicago, they come from California, South Florida's strength was more condos than single family homes.
Yeah.
Single family was really more your market. Coral Gables, Coconut Grove is where families, the best schools in Florida are. People trade there 2 to 8 million, and those people live here. Kind of the market that we've been selling has always been 3rd, 4th, 5th homes. Then you see this huge velocity because of the pandemic, all this attention on single family homes. I agree with Mick. I think condos will come back. Brian and I, we have tremendous amount of listings in just south of 5th, Apogee, Continuum. We have the only 4-bedroom in Continuum South, another 4-bedroom Continuum North. Both are listed at north of 10 million. They haven't sold, right? What happened to those buyers? I think those buyers are exactly on single family homes. Now, the rental, as Mick said, that's kind of a quiet kind of thing brokers don't talk about. The rental market in condos is doing very well. This Muse penthouse, I'll go ahead and announce it. We just rented it. It's leased. Above ask price, it's asking 39, I can't say that. So above ask price, paid up front for 6 months. They know it's being marketed for sale, so I can have access to sell it, but it went right away. The week after we signed the lease, we got a bid 20% higher than he already signed. And the broker was very aggressive. I said, I'm sorry, it's gone, I can't present it. So that's a great point that folks aren't talking about, that the rental market is unbelievable high. I think as now we're Miami in phase 2, I think as bars and restaurants and more of the nightlife and stuff opens up, I think we'll see a resurgence of kind of the condos coming back to life, because people want services, right? That's the one thing single family homes can't offer some of our clients is the 5-star services that St. Regis, Four Seasons, Vaina, Continuum. You have food, you don't have to do anything. Single families, you have to hire staff, right? Some people don't want staff, some people do. So I think we're going to be okay.
Houses are labor intensive. I mean, I've got somebody sitting in my house right now fixing some drywall. Some guy's on the roof, and I got the housekeeper cleaning the house. And
Tell me about it.
It takes a village to get this in order. And houses are really labor intensive. And if you travel a lot, if you're from Manhattan or Chicago. But what's interesting to also see is that there's eyes on that space, and they're able to get better deals than they were last year or the year before.
Oh yeah.
So prices are like, I'm renting it, I like it, but now I'm able to buy it at a discount, and I think if it's priced right, it's going to move.
People are getting great
There's
deals
some
in the
massive
market.
discounts on the market.
We're seeing these kind of big gaps.
Yeah, there was actually down the coastline from here, there's a building we all know, Regalia, where the unit ended up trading for 5.5 million. It was previously at 9. I just did a deal at 1000 Museum, which was previously purchased at 6.5 and traded for just over 4. I mean, we're dealing with massively discounted price, and not everyone's motivated, but there's enough buyers out there who have driving factors that will allow them and afford them to move out of their product at a pretty heavy discounted rate. And then equally there's the buyers that we're all dealing with who say, you know what, this is really good value. This, to my mind, might represent the bottom of the next economic cycle, and I'm okay getting in at this level. So guys, I think this isn't always a good chat. I learn every time I do these videos, I learn a lot. I can't thank you enough. We're all friends and we chat a lot, and I always say, if you're going to be the smartest guy in the room, you got to make sure you're surrounded by the smartest people, and these guys are at the top of their game. And I think between us, we sold hundreds and hundreds of millions of dollars of real estate this year so far, and we'll continue to do so. So as always, thank you again. Any questions, email me, call me, like me, what's up. Mick, thank you. Bill, thank you.
Thank you for having us. Appreciate it.
See you next time. Thanks.